Good evening. I hope you're doing well. Thank you very much for liking and subscribing to the channel. I also thank you very much for the comments that you leave behind, which provide important feedback on how I can make these presentations more useful for you. In today's video, I would like to discuss the 5 major indexes that are frequently traded on the index and the plan that we could create based on our assessment and understanding of technical analysis. So the chart that I have in front of us today is that of the Nifty Midcap Select, which I have set on the weekly time frame. And the idea is to first ask the viewer, that is you, what do you think is the trend of this chart? So if we look closely, we can clearly see that this chart is trading pretty close to its all-time highs. And as we currently speak, this chart is pretty much trading or forming what is known as a double top. Now the question is, will this be a double top, or will this be a new or will there be a significant closing above the all-time high? To answer that question, we will always analyze the daily time frame. However, it is very clear that since prior to this double top, the only bottom that we have is that of a lower bottom, the only bottom that we have is a higher bottom relative to the previous pivotal low. We are going to trade this security in the long direction. So once again, just to clarify, currently the security is trading a double top on the weekly time frames. Therefore, on shorter time frames, it is likely to look like a range. But the general bias on the weekly time frames is on the long side, and the reason is because we can see that the low of 10,050, I have marked with the black line here, is significantly higher than the previous low of 8,500, which was created somewhere in October 2023. So with this assessment that we are going to trade the security on the long side, we will now shift our attention to a shorter time frame. That is, we will divide the time frame by 1/5. So since I have the weekly time frame in front of us, I will divide it by 5 and move to the daily time frame. And in the daily time frame, we can clearly see the double top formation that we had discussed earlier. But in addition to the double top formation, that is a structural design, so to speak, the template of the structure, we will look very closely on what is happening at the candlestick level so as to form an opinion. Now, first step is to understand that this here is the double top. I'll just change the text. Okay, this is fine. Double top. And on this double top, we will focus on the candlesticks that are forming. So very closely when we see, we can see here that we have a small spinning top. A spinning top is slightly bigger than a doji, but is pretty much like a doji. So I'll just write this here. This is a spinning top candle which was formed on the 2nd of May. So we have a spinning top which is formed on May 2nd. And I would like to add that a spinning top is like a doji, which is basically like a doji, and signifies indecision, which means that the market is unclear of what direction to take. So here we have the spinning top on the 2nd of May. This is how it would look to us as of 2nd of May. A spinning top on the double top, that is a pivotal high. That is where the market has formed a green closing. The green closing or the red closing is irrelevant whenever a doji or a spinning top is formed. What is significant, however, is that the market has signaled uncertainty. The day that followed, that is on a Friday, we can clearly see a huge red candlestick, but however, this is not forming any significant pattern like bearish engulfing or a dark cloud cover. Instead, what we see is that the high on the 2nd of May is 11,150 and the high 11,156 to be precise, and the high on the 3rd of May, that is the next trading session, is 11,157. So whenever we have a condition where two candlesticks have created exactly similar highs at a critical resistance level, then such a structure is called as a tweezer top. on 3rd May. So here I will just mention this is the tweezer top that is getting formed, and like any 2 pattern candlestick, we need a confirmation, which we have got today, that is on the 6th of May, and the confirmation would be a clear red close below the previous day candle. However, this confirmation is not very strong. That's largely because we want the red close below the close of the previous candle, but it becomes really relevant when we get a red close below the low of the previous candle, at which point the security is comfortably within the grips of a bearish bias. Now, the question is, will we short the security? And the answer is no. That's largely because our decision to take the direction has been governed by what we are seeing on the weekly time frame for the purpose of this exercise. Therefore, we will not be shorting it. But because we are seeing bearish candlesticks and potential bearish formations, we will not be buying it, and rather we will be waiting for the security to become oversold. The question is, how do we understand if this becomes oversold? We will simply choose an oscillator, any oscillator of your choice. The more common ones are RSI. I will reduce this setting to 5 simply because I have divided the trend to intermediate time frame by 5, and here I can see that the RSI is currently at 60. We understand that the RSI tends to become oversold close to 30 and below. So this 60 is not an oversold RSI. Therefore, in addition, so to conclude, in addition to being at a double top, we saw a spinning top candlestick form at the pivotal high, which signified indecision, which was followed by a tweezer top, which is a bearish reversal, and a minor confirmation, followed by the fact that the security as we speak is not yet oversold. Therefore, we will not be buying into the security, rather we will simply be defending any long positions that we are currently carrying. For the purpose of practice, I will take up another chart. Let's say, for example, the Nifty. Once again, we will put it on the weekly. I can remove this here. And on the weekly, we will see that Nifty is pretty much hovering around its all-time high. And what we have is a rectangular pattern. But the general bias once again remains on the upside because the previous critical pivotal low is right here, which is 18,850 on the weekly time frames, and the next critical low is here, which is 21,150. And from this 21,150, we are largely seeing a sort of a trend structure which can be created by simply joining the lows of this, connecting the lows. This is not just a trend line, but instead a more accurate representation would actually be a channel. So I could simply connect these lows here, and I could also connect these highs. And what I'm getting is that the market is largely trading in an ascending channel, which could be both bullish and bearish, but because the market has created all-time high, we will be sticking to the long side. And the justification for long side is that while a new high has been created, while the security is in a range, yet because a lower low has not been created on the longer time frames, therefore we will not be shorting this security or this particular index. And this decision we are taking on the weekly. Always remember that your investors will take this decision on the monthly charts. Your positional traders will take this decision on the weekly charts. Your swing traders will take this decision on the daily charts. Your intraday traders or day traders will take this decision on the hourly, whereas your scalpers will take this decision on the 30 or the 15 minute chart. In other words, the trending time frame, that is, since we are, for the purpose of this video, have selected the time frame of weekly, we are essentially taking a positional view on the market, and we are doing this on this time frame. In the event I shift my assessment to the monthly, then in such a case we can see that the chart structure is taken. This is a clearly previously marked high is irrelevant. This is a clear breakout, on a security. And what we are basically seeing here is, I'll just connect this trend line from this low all the way to this high. So we can see that from 7,500 to roughly 18,500, that's an 11,000 point move on the index. We can see that the index again dipped into a parallel channel, and we know that this particular structure, I will just make it darker, we know that this particular structure here is known as a flag and a flagpole pattern, where the index has moved 11,000 points. This obviously, here we are looking at the COVID lows. Since the index has moved roughly 11,000 points in one direction, we should expect another 11,000 points after breakout. And since the breakout has happened at 17,250, it is reasonable for any trader on the monthly time frame to set up a target of 28,250 on the Nifty, and he would have done so with an entry of 15,000 on Nifty. That is, such a trader would buy at 17,250 above the high of this particular candle with a stop loss of 15,000, let's just say 250, a roughly 2,000 point SL for a 11,000 point target. And the journey so far for this trader has been pretty smooth, and such a trader would now have revised his or her SL to these levels here, which means the trader is into marginal profit and would hope that the market continues to trend upwards. So this is an assessment that we have done in the monthly, and therefore if we are making such an investment, then we are actually investors. So with this example, I wanted to share that it is possible to behave like an investor or a trader of a specific type by simply changing the time frame that you're analyzing. And further, it is reasonably safe to assume that if a security is repeatedly creating all-time highs, the fundamentals of the securities are very strong. Remember one thing, markets do not fake all-time highs or do not fake breakouts. That is, while they will revert back from the breakout at a technical level, but for it to sustain that and to continuously trade above it for months and months at a time, those breaks are not fake, and there is merit in trading in the direction of those breakouts, because you have shifted all probabilities in you have shifted some of the probabilities in your favor. So regardless, the idea was to shift on the monthly only to tell you what an investor is seeing, and therefore an investor who's seeing this is not even thinking of booking of exiting certain positions. An investor has to obviously see when do I buy next, and the SL for such an investor would obviously be 18,800 at this point in time. And where to buy next, we can clearly see that we have this very nice it's not a Marubozu candle, but it is what is known as an Insen candle. So we basically have two types of candles here, Yosen and Insen. So this is formed in December 2023. So December 2023. What is a Yosen Insen candle? It is basically a clear one directional candle wherein the movement is decisively red or decisively green. And the candle that we see in November-December 2023 form the criteria of Yosen Insen candle. And in the event it were a gap down with such a the reason why I'm emphasizing on this candle here, you can see that the open was the low. Pretty much here also the open was the low, which means at these levels the market had no ambiguity that these are reasonably economical levels to buy, and therefore one of the points of entry of a Insen Yosen candle is the midway of that particular candle, which is 21,000 approximately. When they form as a gap down, then in such a case the same candles are called as Marubozu. So these are terms that you should ideally be familiar with if you have studied candlesticks, and if not, then it will be a great exercise if you can Google them separately. Anyways, coming back to our initial assessment, that is, we have analyzed on the weekly charts that the market is structurally bullish. It is trading near its all-time high, and the question is that while it is doing so, it is forming a double top. So will this double top hold for the time being, or do we look at buying right away? So clearly here is the double top that we are referring to. We can clearly see that this is a resistance, and as we zoom into what is happening on the routine, we can see that the candle that is formed on the 3rd of May is clearly a bearish engulfing. This is clearly a bearish engulfing, right? And this is formed on the 3rd of May. The reason why I'm writing these dates is so that when you are making the analysis on your own, you can confirm the same. So we have this on the 3rd of May, and like any we know this is a bearish engulfing because we can clearly see that the market, when it closed at 22,650, actually opened very high at 22,750 and then decisively closed lower at 22,450, thereby engulfing the full candle that was formed on the 2nd of May. Actually, it also engulfed the entire body of the candle formed on the 30th of April. So this is a bearish engulfing candle, and any bearish engulfing candle would require a confirmation, and like I said, a strong confirmation is a close below the low, but also a weak confirmation is a close below the previous day close. So we are seeing a weak confirmation of the bearish engulfing candle that is being formed. So we are seeing a weak confirmation today, that is on 6th of May. And the reason why it's a weak confirmation, because the close of today is not below the low of the engulfing candle. Now the question is, once again, we are obviously long, as discussed. By obviously long means our bias is long because this is a uptrending security. The question is, do we buy into this? The answer is obviously no, because on the intermediate time frame, that is the daily time frame, we'll see a bearish engulfing at a double top and followed by a weak confirmation. And once again, if I add any oscillator, this time I will simply choose stochastic and make this slightly smooth, 1433, and here we will see that the stochastic is actually overbought. So logically our plan is, if the trend is up on the weekly, we are going to buy on the daily if oscillator oversold. So we can clearly see that this oscillator is not oversold, it's in the overbought territory. So the trend is up on the weekly, but the oscillator is overbought, but then answer is no action if trend up on the weekly. So I'll just write here, if trend up on the weekly and daily oscillator is actually overbought, we take no action on the market, right? So this is what we are seeing, and in addition to the fact that this is a double top, we will take no action in the market. The question is that, does this mean that we have no positions? The answer is obviously no. We will have positions in individual stocks. Those individual stocks will mimic the market in some way. How the extent to which they mimic depends on the index in which they are listed in and the beta that they naturally carry. So all of these factors will be at an individual stock level. The objective of this exercise is to simply apply technical analysis on our day-to-day routine analysis and to form an opinion. And I'm confident that with practice, this process will be extremely quick. It could just take maybe a minute to do this. But initially I encourage individuals who are interested in learning the subject to spend time on the market for it and to see, because you will note that we will see a bearish harami here, we will see a bullish piercing here, we will see a doji here. A lot of instructive candlesticks form as the day progresses, and this makes analyzing the markets very interesting. I hope today's session has been of some use to you. I wish you the best for the remainder of the week in your trading. See you soon. Thank you.